Best predictor of success, innate ability to allocate time properly. Keith Rabois. And Keith is right. And all we ask is 10 to 15 minutes a day. Find that time after the market is closed to listen to our daily review, our once a week comprehensive review and forecast. Take some of the trainings throughout the week. A lot of them are trainings you don't see except being a subscriber. So make sure to subscribe. Thank you, everybody who's purchased the book, Charting Your Way to Wealth, this week. We so appreciate that, and we very much appreciate our Patreon supporters, Patreon members. We have a call coming up in early February, not this Wednesday, but the following. That's going to be our monthly question and answer session where we do in-depth training based on your questions, and you get to talk and ask questions and give feedback. Problems you're having with your practice trades, let us hear those. I want you to be live on that call with us Wednesday after next. I will keep everyone posted. And again, if you're not a Patreon member, want to help us out, follow the link in the show notes. Also, link in the show notes to the book. And guys, I encourage you always, please print out at least once a week. Look in your show notes. You will see the PDF for the comprehensive review and forecast. Print that out, fill that out. And every time you do a practice trade, make sure that you use the trade worksheet. You cannot imagine how invaluable that is. Promise you it is. It is spending your time wisely, getting the most, the absolute most out of what we do here. Now, we see markets moving in the right direction. When I mean right, I don't mean up or down. I mean that stocks are moving in one direction, gold and bonds in another. And it appears we do have a weekly vertical crossover, a good one on TLT. We'll talk about that in just a minute. We see the S&P 500 and the NASDAQ 100 way down. Bonds and gold are up. Look at how this week ended for the S&P 500. We see that we still have a weekly vertical crossover going up in effect, but this is the first red down candle we have seen in several months, in many weeks. And again, it is a solid red down candle pushing through the weekly trend line. Has not crossed over yet going down, so doesn't mean we were jumping in using the Monday effect to the weekend effect on a practice trade. No, we are paying attention. Remember, look all the way back. You didn't have to jump in too early and get hammered. You could wait for the weekly vertical crossover to occur going up back on November the 1st. You had weeks of beautiful up movement. Well, if market rolls over and is going down, and that is confirmed, you may have weeks of strong down movement to jump in. That's the beauty. And of course, what are we talking about? We're talking about something like SH, which is the ProShares short ETF of the S&P 500. Look at that. It's the exact opposite. Why? Because it's a short fund. It is the inverse. And we've got great trainings at the web channel. I'll launch that later this week and make sure everybody gets to study that lesson, inverse ETFs, how to make virtual money when markets crash. And again, remember, we're not a stock calling service, we're an education firm. We want you to practice with us. Practice to show yourself approved. Get good at this. Otherwise, you're just going to lose a lot of money. And we don't want to see that happen, because you know what happens when that happens? You give up, you go away, you convince yourself you can't do this. I'm telling you, you can do this. Just stick with us 10 to 15 minutes a day. Down week, derivative oscillator losing momentum, price percent oscillator heading down, hasn't crossed over yet. Go to the 2-day chart. It crossed over going down back on the 2-day candle ending Tuesday, the 28th of January. Then sideways, that next 2-day candle representing Wednesday and Thursday, the 29th and 30th of January. And then what do we have? The first day of the latest 2-day candle going down on the last day of January 2020. We see the price percent oscillator kicking over. And look at that long derivative oscillator pushing through the weekly trend line. So again, strong down movement. Now, we're going to go to the 4-hour chart, see what it's showing us. That 4-hour chart crossed over going down back on the 23rd, then bumped big down on the 27th, then up for a couple of days. And then the last 2 days been going down. So we'll continue to watch, see if at the end of this next week, if it's a big down week in the market, we might have a weekly vertical crossover, we might not. If that 2-day chart instead rolls around and heads up, then guess what we're going to do? We're going to call that a 2-day recross going in the same direction of the weekly. We'll jump back in. Do you understand? We don't care which direction the market goes. We just want to be able to follow the trend. That, my friends, is the key. That is the golden goose. That is what you want to find so you can successfully practice trade again and again and again and get good at this stuff. Let's now go to the weekly chart. What do we see there on the NASDAQ 100? Red spinning top. It is a down candle. The first solid red spinning top we've seen going all the way back to, can you believe this, early October. And again, price percent oscillator heading down. First time in quite a while. Hasn't crossed over. Derivative oscillators lost momentum first time since the weekly vertical crossover back on the 25th of October, the week ending then. So again, that's some sizable stuff happening. 2-day chart, of course, crossed over going down back on the 30th, Thursday the 30th of January. We have a red spinning top forming, first day of this latest 2-day candle, price right there below the 2-day trend line. And look, the derivative oscillator has gone big negative on that. Look at that 4-hour chart. Again, up a little in the morning and dropping off in the afternoon. These are Heikin Ashi, separate kind of candlesticks you might be used to. Heikin Ashi, I'm told in Japanese, means average pace. And we see that average pace falling way off. So that's where we are, just waiting to see how stocks sort out this next week. Could be a good week, could be a bad week. We'll let the charts lead us. Now we go to what we have been waiting for. Check it out, my friends. I told you throughout the course of the week to be watching for this. Ding, 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 ding. It did occur. How many of you jumped into practice trades at the end of the day on Friday with the weekly vertical crossover going up in bonds? How many of you? We told you to watch that market right at the close of the day so you could participate in a practice trade. We'll go through how the market set you up for that, whether it was if it was a potentially good move or not. Now remember, your losses, your loss limits are always in effect along with your profit limits. We have that great training on Secret of Profit and Loss Bands. We actually launched it again this last week. I hope you got it and listened to it. If you haven't, look back on your emails, and that's for everybody who subscribes for free at chartingwealth.com. You will see that we did offer it up. The link is still good. Secrets of Profit and Loss Bands. Well, we have a weekly vertical crossover. It has happened. And of course, that notice will go out to everybody who's a subscriber to our texting service. As soon as I finish this program and get it uploaded, that's going out. And of course, look at that 2-day chart, just like stair steps, moving up strong. So that 2-day chart continues to remain strong. Also, first day of the latest 2-day candle, in line, of course, with that weekly vertical crossover. And what do we see on the 4-hour chart? Decent. Let's see. In the morning, reached a high of 145.90. In the afternoon, reached a high of 145.99, so 9 cents higher, continuing to move up, didn't lose a lot of energy. So again, we are hoping that that weekend effect or that Monday effect, remember we launched that training yesterday for all subscribers, it's in your show notes. Check that out. Make sure you have a good understanding. I actually listened to it again last night. A good understanding of what the weekend effect is. It will help you a great deal. Now, let's leave TLT and go to gold. What is gold doing? It's beautiful. What a successful practice trade I have had in gold, getting in way back. Let's start with the weekly chart. Many of us were looking and jumped in a little early on gold. It served us well. That was based on some prior experience. We jumped in a week before. It was really close on that weekly vertical crossover. Took a bit of a chance, reduced our jumping in X factor, cut it in half because we want to take less risk. So if your X factor is $100,000 in a virtual trade, you might have jumped in at around 50 just to be careful, seeing what was happening in that strong up movement in gold. And of course, the next week is where we had the weekly vertical crossover actually occur. Oh, the last number was around 147 something. And of course, we have reached a high up to 149.68 by the end of this week. That is the third week. Ending the third week was a little weak to start with, but built and got stronger all the way through the end of this week. Derivative oscillator gaining upward momentum. That price percent oscillator on the weekly chart heading up quite nicely. Two-day chart had been considerably weak and concerning for us. Got flat on us a couple of times, but look what it ended up doing. We saw those Bollinger Bands were tightening up a little bit. All of a sudden, things took off, just moving right up that two-day trend line. Price percent oscillator heading up, and the derivative oscillator finally, first day of the latest two-day candle, has gained some energy. Quite beautiful. It is pretty to see. Gold is continuing to go up for the day, 0.59%. We go now to that 4-hour chart. Now remember, that 4-hour chart had booted up for us. We can go back to when we had the original launch. It was weak on us, kept weaking out, and then did end up crossing over on the 25th, but I'm sorry, on the 24th. Couldn't have been on the 25th because that was a Saturday. But if you look, and this is important to pay attention to because we can get carried away with the shorter charts. You notice that that shorter chart was continuing to build even though it moved down and then it started moving up and sideways a little and up. And in fact, for those of you who trusted the weekly vertical crossover, even though it got a little shaky to begin with and the price percent oscillator was heading down, we keep talking about looking to your bigger charts, your two-day and your weekly, to help you determine what you should do. And when that weekly chart is strong, when that two-day chart is going in the right direction, if you have experience and can trust those, the 4-hour chart may not be giving the kind of signals that you want, but those bigger charts, again, are the bigger waves. All things being equal, market tends to move in the direction of the largest chart, and that is our weekly. Almost always. We do look at a quarterly, once a quarter, but that is important for you to watch and pay attention to. And learning that. You only learn that by doing that, by practice trading, keeping your trade worksheets, filling out your weekly market worksheets. And again, if you really want to be Johnny on it, that daily market worksheet. I can tell you that if you will do 1, 2, 3, the more of those things you do, the faster, the better your training is going to go. You're just going to see quicker, better results. You are if you pay attention and you chart and you keep records. Remember, Pearson's Law. We'll talk about that over the course of this next week. Again, folks, that's where we are as we end the day. Weekly vertical crossover on 20-year bonds. Gold still moving in the right direction for us and been a wonderfully successful practice trade. Waiting to see if this market's getting ready to roll over hard, going down. If we end up this next week with a weekly vertical crossover on one or both of our stock indexes, we'll be excited and ready to go short in our practice trades. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.